We're back. See what episode is this? Mm, is this 89? I think this is 89. I got my show notes up, but I can't remember which episode it was. Ooh, 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 ooh. Gotta turn my other one off. 1 second. Okay, there we go. We got a lot to cover this week. So a lot of stuff that went on this week. A lot of things have gone on. A lot of things have happened to folks. What's going on, Natasha? Natasha, I gave you a break this week. I canceled the meetup on Wednesday because I know you've been sitting in class for 4 or 5 hours. And then to turn around and come back and be in the class for another 2 or 3 hours. But you're not getting off this week. No, ma'am. No, ma'am. No, ma'am. No, ma'am. What's going on, Don? What's going on, Natasha? How you doing? Todd, Don, what's going on? What's good? Congratulations to all the winners. We'll be getting to you this week. Um, hope you're excited about your winnings. Hope you got Birdman hands. Hope you got Birdman hands. Hope you enjoyed your week. Um, also, I also want to give out. Oh, you got your merch too. You love your hoodie. That's good. 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 I saw Stacy got her shirt as well too. No steak, no date. Got to start wearing them more often. I wore it out one day and the guy laughed. So those that get it, get it. Those that don't, they just don't. All right. So another thing, I wanted to also send out prayers to the family. Well, I lost my aunt too, so shout out to and prayers out to the family on my dad's side. But also the the ones in Idaho. I had to go and read some more on that story, but they were killed with a knife and so forth, and then the ones in Virginia, and then you got the situation that happened in Mexico. I mean, like I said before, man. Um, you everybody can't go. Everybody can't go. Keep it close and tight, because everybody can't go, right? And then not only that, when you get there, everybody ain't your friend when you get there. So you gotta gotta move. I don't want to say stuff like you just gotta keep your head on a swivel. And people like I don't want to live like that, but everybody don't have your best interest at heart, and everybody don't care about you and love you the way you do, or some of your family members and so forth. So you gotta, you know, be careful with, um, as they say, fraternize with. That's what they say. And and that's not just your friends, that's your family too. Um, that's another issue. So I'm gonna sit there right there. Um, just know that it's just know this, and anybody who knows me, um, and who has been around me, if you hanging out with me and D, you coming with us and you leaving with us. So if you had other plans, you would have to do that after us. We're gonna make sure you get to where you need to go safely. We're gonna make sure you get to where you had to come from safely. Nobody, I don't care how old you are, even if you're 70 years old and your mom is 90 or whatever the case may be. Nobody wanna ever hear the loss of their child or their sibling, um, due to external forces, right? Right. It's one thing to lose your child or your sibling or your parent or something like that because they got older, they had been sick for a while, this, that, and other. Nobody wanna ever hear that they lost their loved one by the hands of somebody else. That's not what you want to hear. Yeah, those that have even the ones that do have something to lose, Sim, like some of them, some of them may not can hang out with you either, right? Some of them may be, um, some of them just may be jealous on your way up, on your come up. So you just got to keep your head on the swivel. You just got to keep your head on the swivel. All right, so we got a lot to cover this week. D, do we want to do a word from our sponsor, or you just want to hold off on that until we update it? Okay, so we're gonna hold off. Miss Phoenix, what's going on? How you doing? I see you've been watching the videos. I appreciate you for watching the videos for the 300K, 500K earners. I appreciate you. I try not to, whatever's covered in there, I try not to bring that to the show. I try not to bring that to the show. That's exclusively for you all. And it's gonna get more exclusive come next year. I got some speakers lined up for next year. And I got I'm putting together a panel um for investors. I'm putting a panel together like what we see where the market going and so forth. So I'm putting together a panel. So if you're not a part of that 300K, 500K, you won't get that. It won't be public here, and it won't be on the meetup. I can tell you that. It's exclusively to you all because I want you all to have the benefits of not just my network, but the network of people that I also bring in as well too. Right? I want you to have the right to talk to them, right, exclusively, so you can help build your network, right? Bring people into the network that are moving, that are doing things, that have the vision, that understand your vision, that don't. I'm not saying they don't critique your vision, but they don't take your vision and tell you it's trash or you'll never get there or you won't succeed. I don't know. I don't know about those people. Like I try not to hang around with those people. Right? You'll get them though. They're out there. Trust and believe they're out there. But that's what I'm looking to do. All right, so let's open up with some. Let's open up with what I have on my screen. So in talks with, like trying to, you know, just look around and set my mom up, and you all probably already know about all these things, but I'm just gonna reiterate some stuff. Right. Um, looking to set up like, hey, if you got some money sitting there. I went and looked up a high yield savings account yesterday. Um, and this is just a high yield savings versus money market, and we're gonna get into that. But I also looked at Cap One. Let's see, Capital One right here, and there's some other ones, but Capital One got CDs for a year, um, at 2 years at 4.1 and then 4.25 on 5-year CDs, right? And then they show you like if you do a minimum deposit of five, you earn in 24 months $418. You know, I'm just looking at things you all can do, especially those that you don't have the 17,000 or 20,000 or 30,000 or 40,000 to invest, but to sit in the account, but at least you may have $500 to sit in the account, and every month you add $40 to it, or you add $30 to it, or Every month you add $500 to it, right? But let it make some money for you while you're sitting there, right? Um, Here are the rates, like I said. For 12 months, the longest month is 6 months at 4.25. I also went to Nerd Wallet, and they got the best savings accounts. Again, you could do available in Florida or Georgia or wherever at. Let's go to Colorado and see what they got. All right. So again, they're all these right here were savings account, high yield savings account, 3.25, no minimum balance. Marcus, no minimum balance. Discover, Citibank, Cap One. Uh, Amex got one for $1. Um, I was just looking out, seeing what's out there. Um, this one right here, this is with bank rate. I just want to give you a variety of places. You can go to Investopedia too and look at from Investopedia perspective. Um, but here they got 4.5 with BMO. Um, let me just do CDs. So they got 4.5 here on the CD for a year at BMO. Basque Bank is 4.1. Marcus is 4.0. And so we were having this conversation yesterday, and the conversation was centered around, um, you got your liquid. This is all liquid. We're talking all liquid here, and having the ability to. And let me blow that up because it may look a little small on your screen. And having the ability to move your money around every year because some things are promotional, right? So you go with who's ever giving the promotion at the time, and you lock it in, right? So you may be 4.5 right here, promoted offer, grow your money with a high rate secure CD. So again, you may be in there. You may have, like I say, this is liquid money, things that you're not, and I'm looking at it from a perspective of like you got an emergency that may come up or something like that. You just want to be liquid to get that money out, right? But while it's sitting there, let it grow. Drop a one in the chat if all this makes sense to you. Uh, Drop a two in the chat if it doesn't make sense to you, right? I just want to know where everybody's at. If you're following, if you understand, where you can, how to move your money around, right? Because the last thing you want to do is have your money sitting there. And granted, this does not beat inflation. This don't beat inflation. I'm not saying it is. I'm not saying it's gonna beat inflation. What I'm simply saying is you have the ability to put your money in somewhere where it can actually grow. Now, another another option, if you want to just have your money sitting there and growing as well too. I've talked about these places before. If you don't want to do that, the only thing about these places like your ground floor, fund rise, um, even if you're doing dollar cost averaging, I kind of look. I don't know, kind of. I just look at those lists. Long term investing, you're not gonna be liquid with them. They're gonna be tied up into something. You're gonna have to wait a couple of days or so to get that money out, this, that, and another, right? So you could go invest in a fund rise. You could go in and you could DCA your way into a stock. You could do those things, but you're not as liquid as you could be. Um, Looking at that, so you can look at your Bank of America's, your Wells Fargo, or wherever you bank at. But I've looked at. I think I even looked at. I think I looked at Wells Fargo. Let me see. I know some people probably still bank there or whatnot. Let's see, Wells Fargo. Let me see what they got. Uh, oh, come on, Wells Fargo. Oh, fine. Let's do 332. All right. Let me see. So Wells Fargo, 13 months, 3.2 annual APR, annual percentage 3.25, relationship interest rate, relationship, APY, 3.5, and they got 12 months, 7 months, and this is a special fixed rate CD, but that's a minimum of 5,000. This is a minimum of 2,000. Like they just don't have like their rates, not that good, right? You gotta have a minimum about see. That's what I'm saying. So you probably do better by looking at the ones from Bank Rate, Nerd Wallet, go to Investopedia because the banks their rates are not that they're not favorable, right? So go check them out, and then too, if you want to walk in a bank and talk to somebody, go in there and walk and talk to somebody, but build your peace of mind with a minimum of 2,500. When we were looking at these over here, like not that one, these CDs right here got a minimum of 1,000 for a year at 4.5, right? 4.1. If you're not familiar with these two, go with your Goldman Sachs, a minimum of 500, throw it in there for a year. Slow, little easy money while your money's sitting there, right? Like I said, if you got $500, put $500 in there. You may put in $70 a month, right? But at least it's making some money, right? I'm not saying you're gonna get wealthy. I'm not saying that. I just saying you're gonna make some money, right? We talk about making money in your sleep. And this is the other thing I want to bring up too. Utilize all your avenues to make money, right? Utilize all your avenues to make money, and I'm gonna go a little bit more into that in this show. We're gonna deep dive. We may only have one show today. Not the fact that I don't have material for the next show. I got a ton of material for the next show, but I really want to do a deep dive with you all today, um, because we're coming up on Christmas and Thanksgiving and the New Year's, and you all gonna start making these New Year's resolutions. And don't do it. Whatever resolution you gonna have for January the 1st, do it now. Whatever you said you was gonna do on in next year, do it now. Do it now. Go do your research. This is not financial advice. These are just things I have discovered along the way. What I want to say to you is this: go out and whatever you were gonna do in January, do it today. Don't wait to January. Don't wait. Just do it today. Just carve out 3 or 4 hours for the weekend. 2 hours today, 2 hours tomorrow. Go set you up an account. Go get you a high yield savings account. Go get you a money market account for those that didn't that missed out. I bonds are still out there. They're still out there. They're still returning. They're at six on the I bonds. They're at 6.89. I bought one the other day. It's quick and easy to set up. Excuse me. Right. Um, and I think you get up to 10,000, but you get 5,000. I think I forget how it works. 5,000 for you individually, and then the other 5,000 you have to do some another way. Right. And so right here it says you can buy electric I bonds in your Treasury direct account. You can buy paper I bonds with your IRS. That's what it is. You can buy the paper ones with your IRS tax refund. So if you get a refund from from the IRS, you can just use that to buy your I bond. That's one of the other ways. But you can also have a business that buys I bonds as well too, right? All right, it says I savings bonds earn interest monthly. Interest is compounded semi-annually, meaning that every 6 months we apply bond interest rate to a new principal value. The new principal is the sum of the prior principal and the interest earned in the previous 6 months. Thus, your bond value grows both because it earns interest and because the principal value gets bigger. We list the interest rates for all our bonds ever issued in two ways. There's a matrix shows fixed rate, inflation rates, and combined rates together in the PDF, or in the separate tables for fixed rates, inflation rates, and combined rates. How long does an I bond how long does an I bond earn interest? 30 years unless you cash it out. So you could be compounding for 30 years. Another way to DCA your way in, because it's a minimum of $25 for the purchase. So say you got $50 laying around, you already bought, like say $75 worth of I bond, go buy $50 more. Every time you think about you about to go do something, that's what, no, now granted, me and D didn't do that last night. We didn't do that last night. But again, because I went and spent money last night on some new frames, I needed whatever money I spent on those new frames, I gotta take and go put it on something that's gonna earn some money, right? So I bonds is another way, a high yield savings account another way, buying a CD another way, right? And these are little things that you could do right now. Say you have children, or you're starting your financial journey, and you just want to be able to just get into something really easy, right? This is just little small, little easy ways, right? All right. So then it says, what do I get when do I get the interest on my I bond? With a Series I savings bond, you wait to get all the money until you cash in the bond. Electronic I bonds we pay automatically when the bond matures if you haven't cashed it in before. Paper I bonds, you must submit the paper bond to cash it in, right? And then they have the EE savings bond, and I looked at that, and that one is high as the I bond, right? Can I can I can I cash it in before 30 years? You can cash in and redeem your I bond after 12 months. However, if you cash in the bond in less than 5 years, you lose 3 months of interest. For example, if you cash in the bond after 18 months, you get the first 15 months of interest. How do I find the value of my Series I bond? If you have a Series I electronic bond, you can see what it's worth in your Treasury account. So I don't want to go into that this week, but the concept called bond laddering. Um, and I just give a quick overview, and then we'll come back to it next week. But this is just another way that people invest over time, right? They use the bonds over time to invest, right? So it's called bond laddering. So let's go here and look at bond laddering, right? Uh, discover how bond ladders can help you secure predictable income of bonds with the flexibility to reinvest if the rates go up. Ready to create your own bond ladder? Our new CD and Treasury ladder bill can make it simple. What is a bond ladder? Let's blow this up. A bond ladder is a portfolio of individual CDs or bonds that mature on different dates. The strategy is designed to provide current income while minimizing exposure to interest rate fluctuations. Instead of buying bonds that are scheduled to mature during the same year, you purchase CDs or bonds that mature at staggered future dates. Spreading out the maturity dates can help prevent investors from trying to time the market. Staying disciplined and reinvesting the proceeds from the maturing bonds can help investors to ride out the interest rate fluctuations. I covered this a little bit before about bond laddering, but again, this is not financial advice. I'm just giving you options. So far we covered high yield savings account. We covered getting a CD, right? And we'll now go into the money market. I'll explain the difference between the two back on that page. And then we talked about I bonds. And I also talked about where can you find this information from. Again, you can go to Investopedia, you can go to Nerd Wallet, you can go to Bankrate, you can go to SoFi. There's a ton of them out there that'll give you like what who's pulling what and so forth, right? And then you want to look at something I say that doesn't have a whole lot of fees with it. Easy to get into, something you can set up. For those that have American Express, we saw Amex has one that you can get in. You got to maintain a balance of $1, so you can just kind of roll out because you already there at Amex, or if you have Capital One or what have you, you can just roll out and go into those things, right? It says, what's the primary goals of a bond letter? There are two primary goals of a bond letter: manage interest rate and manage cash flow. Let's talk about cash flow. Since many bonds pay interest twice a year on dates that generally coincide with their maturity date, investors can structure predictable monthly bond income based on coupon payments with different maturity months as well as years. So a good one for this, let's talk about you got a you have a sibling that's really not good with investing, and they turn to you and they ask you, hey, I want to invest in something, but I don't want to be risky, and I don't want to. And again, you got to remember, people want to get access to their money quickly, right? This is not financial advice. I'm just saying, here's something you can tell them: hey, invest in a bond or a CD where it's earning a little interest, right? Where they can see it, they can log into it, they can go drop $5, $10, $100, $30. Your grandmama slid you the money folded up in her hand, in the hand, and it's $50, and she's like, baby, don't spend that everywhere, and you go take that $50 and go put it into an account, right? Just that little thing. So that's how I'm looking at this. So managing interest rate risk by staggering maturity dates, investors avoid getting locked into single interest rates, right? So this year, people who got in on the I bonds at 9 point, what was it, 9.8, 9.6, 9.682 or something like that, they invested in that time frame, right? Now you come back, it's still at 6.8. So they have our bonds over here that are locked in. Maybe they put in 10,000 or whatnot. So they're locked in with that I bond at that rate. Here's a new rate for I bonds at 6.82. There's going to be another set of rates that are gonna come out. Now you're starting to stagger the maturity and so forth. So you're just like, okay, I'm here for this one, I'm here for that one, I'm here for this one. Let it sit there, let it do. You still, again, over time, you still doing the investment throughout the year, right? Throughout the year, you're doing this investing, right? So it says, a ladder helps smooth out the effect of fluctuations in interest rates because there are bonds maturing every year, quarter, a month, depending on the number of rungs in the ladder. When a bond matures, an investor can reinvest the principal in a new longer term bond at the end of the ladder. If the interest rates have risen, they'll benefit from a new higher interest rate and keep the ladder going. If the interest rates were to fall, unfortunately, the maturing bonds would likely be reinvested at lower rates. But the bonds at the end of that ladder will likely have locked in higher yields already. How is a bond ladder created? The bond ladder itself is fairly straightforward to create. The overall length of time, spacing between maturity, the types of securities are primary considerations when building a bond ladder. Even in a low or rising interest rate environment, bond ladders can help to balance the need for income while managing interest rate risk. So here's the three steps. They got rungs, spacing, and materials. Take the amount that you plan to invest with the goal of extending the ladder as far as possible. For example, $100,000 to buy an individual bond could be invested with 10 rungs of 10,000 each. An additional benefit to having at least 6 runs is that the investor can create a ladder structure to generate income every month for a year, right? So you got this tech money, you got this $50,000 in a sign on bonus. You use 3.5% to go buy an asset with the FHA. People going to tell you do 20%. 20% is great if you got it. If you don't have it, use the NACA programs, use that 3.5, find some grants, buy it in the business, whatever the case may be, right? Go buy you get you, if you want to invest in some stocks, you can go invest in some stocks. That's fine. DCA your way in. Right now Apple has been rolling. I can't complain. I looked at it this morning. I was like, okay, Apple, we still in the game. You returning 11.9% on my money, and then it may return 30%. Like, Apple, we still in the game. I'm working with you, Apple. All right, so that's these are just ways. Still working with this 50. Um, you can go buy you you can go buy an I bond. You can go invest in ground floor fund rise, right? But you need to have that money come to you, make some money, right? You need to make some money, right? So these are just ways where your money can make you some money while you sleep. And you can always be a part of an investment group as well too. Spacing. The distance between the runs is determined by the span of time between the maturities of the respective bonds, which can range from months to years. Generally, the spacing should be roughly equal. Bonds with longer maturities tend to offer higher yields, though shortening the bond maturities generally reduces the income and the interest rate risk. Materials. Just like a real ladder, investors can build their ladders with different materials. In other words, different types of bonds or CDs. Moreover, investors can utilize the potential tax advantages of municipal bonds, the credit guarantee of the U.S. Treasuries, or the generally higher yields of investment grade corporate bonds. That's why we generally prefer investors to focus on higher rated bonds when building a bond ladder. Lower rated bonds, like high yield bonds, have a greater likelihood of default and could negatively impact the goal of steady income and predictable value of maturity, right? Again, like I said, I won't go. I'm not gonna spend too much time on it. This is just a website y'all can go to. You can check it out. I'm not saying you have to do this. I'm just saying some people are very conservative, and they want something that is easy for them to watch and easy for them to see. And then people will build up to be more aggressive over time, right? They'll build up to be more aggressive over time. Your risk tolerance is really on you. What's your risk tolerance? So, um, let's go here. Risk tolerance, and here's a quiz too, right? All right, so let's drop down. So they got these different tolerance quizzes. Here's one from Vanguard. Hopefully, I don't have to log in. All right, let's start our quiz. Yeah, sure, yeah. All right, it says as I withdraw money from these investments, I plan to spend it over a period of time. Right, so they walk you through this. It says, "Why am I being asked?" Right. It says once you start withdrawing and spending your money, you'll want to be sure it would last as long as you need it to, depending on your goal. That could be a short or long period of time. It might be a one-time expense such as buying a house, which they call that. Some people put that in short term. Several years of paying college tuition, or even decades of enjoying a long retirement. These future plans are important to consider when mapping out an investment strategy. Right? Go back. All right, it says as I withdraw from these investments, I plan to spend it over. Let's say we're doing a long term here, over 15 years. It says when making a long term investment, I plan to keep the money invested for what, 1 or 2 years, 3 or 4 years, 5 to 6 years. I'm gonna stick with long term here. We're gonna have a long term mindset on that. When it comes to investing in stock or bond, mutual funds or ETFs or individual stocks, I would describe myself as very experienced, somewhat experienced, somewhat inexperienced. I'm gonna go with somewhat inexperienced. I'm gonna say I'm a beginner, and I'm gonna do somewhat inexperienced. I heard about them, I've seen them. I bought some stock because somebody told me to buy Amazon or Tesla on a split. I bought it on a split. I put $1,000 into it. I have a Charles Schwab account or a Fidelity account. I log into it. I see it. Oh, I heard about slices. I'm gonna put $5 on the slice. Right? I'm gonna still say somewhat experienced. I mean, somewhat inexperienced, but they just know they've heard somebody talk about it. They did the steps, but they really don't know everything, right? I don't know. Would y'all consider that somewhat experienced or inexperienced? I went with somewhat inexperienced. It's there, but I ain't really doing nothing with it. All right. The next question is: I plan to begin taking my money from my investments. What, after about 15 years, 11 to 15? We'll say more than 15 years. My current and future income sources. You work in tech, and you're not working at, and you got 20 10 20 year skills. We're gonna say stable, right? From September 2008 through October 2008, bond lost 4%. If I owned a bond investment that lost 4% in 2 months, I would what? Sell all the remaining, sell a portion of remaining investment, hold onto the investment and sell nothing, buy more of the remaining investment. You don't know. You're saying, hey, I don't know what I would do. Now, I do know what you would do. You may panic and you may sell, or you may hold on to it and do nothing. We're gonna say you're gonna hold on to it and do nothing, or you may be like you may have started reading up. Let's go with you're gonna buy more on the remaining investment. But 9 times out of 10, I think most people fall into I'm selling it. I'm getting out. I lost all my money. I ain't doing it. I'm out of here. All right, next it says the charts show. Here we go on the right. The charts show the greatest 1 year loss and the highest 1 year loss gain on three different hypothetical investments of $10,000. Given the potential gain or loss in 1 year, I would invest my money in what? So you're saying a minimal volatility, a moderate volatility, most volatile. I'm going. You're gonna probably be moderate. You're gonna be moderate. You're like, nah, I want to take some chances, but this right here is a this right here is minimum, and then this right here is most. So I'm saying you're gonna be moderate. And it says during market declines, I tend to sell portions of my riskier assets, invest the money in safer assets. I'm gonna say somewhat agree. I would invest in a mutual fund or an ETF based solely on a brief conversation with a friend or a coworker or a relative. I'm gonna say someone would agree. It depends on how much you trust that person. We got two more questions. From September 2008 through November 2008, stocks lost 31%. If I owned a stock investment that lost 31% in 3 months, I would sell everything. I'm getting out. No, don't do that. You're going to be smart. I'm going to say you're smart. You read. You read. All right. Generally, I prefer an investment with little or no ups and downs in value, and I'm willing to accept lower returns these investments may make. Well, let's say you somewhat agree. All right. My current asset allocation. Do we keep? Okay, here we go. Short term reserves, bonds, stocks. Let's see. Type of percentage. Let's go here. We're gonna even this out. We're gonna say uh 35. We're gonna say you're up here. We're gonna say you're up here at 45. Nah, let's put you at 50 here. And that'd be 25. Is that 20? Is that it? Nope. They don't equal 25 and let's see, 75. 75. Okay, let's go. Let's do here. There we go. Get results. All right. It says your results. And there's a quiz you can take. We just walk through it. I just randomly answer stuff. They want you at 80%. It's a suggested allocation at 80% stocks, 20% bonds, and it's the 80-20 mix, right? It was like your current asset is 50, 25, and 25. They moved you out of short-term reserves. Now, again, everybody may answer those questions differently than what I did. I just went through it just to show you how easy it could be for you just to walk through and step through it. The next thing that I want to go over, since we are here, is When do you all take the time to go find you um, a financial planner? And we talked about this the other week, but you couldn't see the video. But this is a great time to do that. So what I'm simply saying to you is do your own research so that way when you're sitting in a room talking to financial planners and advisors or even a CPA or an enrolled agent, you at least know the lingo, you at least know the terms, right? Go to places like Investopedia. If I went over terms today, ETFs, you don't know what that means. I bonds, you don't know what that means. Go look at Investopedia and look at what those things mean. Do your own due diligence. However, don't do your own due diligence to the point where you don't execute, right? Where you don't execute. We need you to execute today. So let's get into this video here from the money guy on when you should hire you a financial planner. So let's go and let me turn it up. I'm not getting any sound on my end. Hold on. Here we go.
Brian Preston, the money guy.
Okay, Glove has a question for you. For those that are investing on their own without a financial advisor, what do you suggest to help those of us who are hesitant to seek out guidance from a financial advisor? So at what point do you go from do it yourself to calling someone in who knows what they're doing?
So I've said this over and over again. How do you know you're at that? Well, let me back up. Hot take. You ready for this, guys? This is my hot take.
I'm ready.
You ready? Does everyone need financial advisor? Pop quiz. Should everybody hire a financial advisor?
I'm going to go with no.
I don't think so. There are a lot of, by the way, wealthy people. There are a lot of wealthy people out there that would be horrible clients, right? Like because they have their own strategy, they're fixing their own thing, or they want to do that's okay. There's enough information stuff out there that you can educate yourself. You can go out there and equip yourself to be able to do this. The discount you may be having is we do this for a living, right? Where you have your financial situation that you look at. We as advisors look at hundreds of financial situations. We've been able to compare people just like you that are 3 steps ahead of you and 3 steps behind you to help you assess, hey, am I thinking about this the right way? So we think there are generally 3 times where it makes sense to hire an advisor. We talk about this over and over and over again. The first is the gravity of your decisions becomes so great, it starts to make you nervous about the impacts of those decisions. So if I make a 10% boo-boo on $10,000, I'm probably not changing my life. I can recover from that. I can recoup that. If I make a 10% boo-boo or blunder on $1 million, that's income replacement. That may be more than I'm saving in a year. That may be a gravitous decision. How about this? I'm thinking about retiring, right? If I make the wrong decision about what I'm having for lunch today, I can bounce back from that. That's not going to derail me. If I make the wrong decision and I tell my boss, I'm out of here, and then I go start working on my spreadsheet and I say, it might be hard to get that water back up. So when the scope of the decisions you make is so big, it might be nice to have a second set of eyes lean into that. So that's the first one. Second one is our financial life just gets complicated, right? Like as things take place and as we move on, you just get thrown. Complexity has this way of finding. Your tax return goes from like easy to understand to absolute gibberish and rocket science. Like, what is this? What are all these things? Your compensation changes, your estate plan changes, your insurance needs change. All these things start happening. Like, buddy, I'm really good at making widgets. I'm a great widget maker. I don't have a degree in financial planning. I don't know how insurance works. I don't know how to save for college. I don't know what a 529 is. Is a 539 better? I don't know the answer to these questions, right? If you find yourself in that place where, man, I just can't be an expert in all things, I need to hire an expert in those things because my life has gotten complicated, that's sign number 2. And then sign number 3, and this happens to all of us too, we just get so busy. All of a sudden, life and community and work and family and all these things are pulling on us. And we keep noticing financial stuff keeps getting on the back burner. Oh, yeah, I'm going to get that will, but. Oh, well, yeah, I know I got those stock options, but. Or, I haven't checked my savings rate, but. If you find that you're just full of buts, you ought to think about, should I get a financial advisor to come help me get my butt in order, right? Like that is what a financial advisor
Nice tie.
can you like that?
Mhm.
That's what a financial advisor can help you do. So the question you have to ask, Love, is, am I at that position? Am I at the place where the cost of a financial advisor is less than the value that they add? We tell this to all the clients who hire us, and I don't mind saying this on air. If you come to me and you want to hire me to be your financial advisor, I'll tell you, hey, here's what I charge, here's my fee. If at any point in time throughout a relationship, you don't feel like the value and the service and the expertise and the stuff that I'm doing for you, the value that I'm adding for to your life does not justify the fee that I charge, don't keep paying me. That's not a favorable outcome for you, right? When it comes to time to hire an advisor, you should think through that lens. Is what I'm going to pay them going to have a greater return to me over the long term? Because sometimes it's not just rate of return. That's, if you're hiring somebody for rate of return, we're not your folks. That's not what we do. If you're hiring someone for like value add to your total financial life, that's what a financial advisor can do. And we have a great deliverable. If you're thinking, I wrote an R, it's glove, right?
Yeah.
I keep calling him Grove. Glove, if you want a really great tool, go to moneyguy.com/resources. And we have this deliverable. Is it eight questions to ask?
8 questions to ask your financial
advisor. 8
advisor.
questions to ask either your current advisor or the person you're thinking about hiring. And it'll help you start discerning for yourself, is this valuable? Does this make sense for me? Is this something that I should do?
So here's a question: how many of y'all have a financial advisor, or you just have a CPA, or do you have neither one and you just got it? You balance everything. You look up your own tax codes. You do it all by yourself. Like, what are you currently doing, and do you think you need to change it? Right? Do you think you need? I know I need to change mine. I know I need to change mine. We got a lot going on. It ain't easy. We ain't in Kansas no more. We're not in Kansas no more. So this is the video that I was gonna play a couple of weeks ago. But again, your financial advisor, and then there's a financial planner, and then there's also estate planning. So there are a lot of little nuances that you may need to seek outside of what you currently have and set yourself up and understand the differences between all those things, right? Speaking of differences, let me get back to this one. This right here is saying, what's the difference between a high yield savings account versus a money market account? All right. It may not come to a surprise that putting money away can help protect you from unexpected financial hardship, but it's not always easy, especially if you're not sure where to save money. Two possibilities are high yield savings accounts and a money market account. If you're not sure what they are and how they work, let's take a closer look. Let me blow it up a little bit more. Key benefits to high yield savings and money market high yield savings accounts and money market accounts typically come with higher annual percentage yields, APY, than the standard savings account. Typically, they're both insured by FDIC. So what does that mean? Potential savings and growth. APY is an annualized rate that helps you understand how much money you'll earn on your balance after a year. So with these products, you may be able to save and grow your money. Security. Both of these types of accounts are typically FDIC insured up to an allowable limits as insured institutions. At insured institutions. This means on the off chance that the banks fail, you're insured up to that limit. And so you need to find out if you're insured up to that limit, right? What is the difference between high yield savings and money markets? A big difference between money market accounts and high yield savings accounts is the access they provide to your money. Money market accounts tend to come with checkbooks, whereas high yield savings accounts typically don't. Both accounts, but both accounts may still have monthly withdrawal limits. There are also may be differences in requirements to open and maintain an account, such as minimum balances, deposits, and fees. Typically, savings accounts are easier and less expensive to open. A few things to keep in mind about high yield savings and money market accounts. Because these products typically offer higher APYs than your standard checking or savings account, they could come with a few rules. Minimum initial deposits, minimum balance requirements, and transaction limits. And let's talk about that. Even though some money market accounts may come with a debit card and a checkbook, they may still be considered saving vehicles. So some banks, as they do with high yield savings accounts, may limit the number of monthly transactions you are allowed. Which is better, a money market account or high yield savings account? There's no right or wrong answer to that. Both of these products can help you build your savings for a rainy day, for savings for a vacation or a wedding. If you're looking to choose one, consider things such as interest rates, minimum deposits, minimum balance. A little research can go a long way. A money market and high yield savings account worth it? Certainly can be. If you're looking to start saving and can meet the minimum initial deposit and the minimum balance requirements that generally come with these higher saving rates, one of these accounts may be right for you. Bottom line, there aren't too many differences between these two accounts, but both can help you save and grow your money, right? We're not talking about a lot of growth. We're just talking about 4%, 3%, 4.5, right? 4.1 versus 0.01 that you get on a savings account, right? So again, we're looking at again, you're liquid, you got some money you're investing, you want to put it in there really quickly, be able to access it, whatever the case may be. You got some extra money laying around, you got a sign on bonus that came up. You got not even a sign on bonus, you just bonus that year and you got $500. Don't go spending on something new, go just put it back in there and invest it, right? DCA your way in on a stock or what have you, right? Or you can go put it into an ETF or whatever the case may be. But the goal is, if you make money, have it make money, right? That's the goal, right? So far, so good. We all understand. Drop a one in the chat. Let me know where you're at. If you're still with us, let us know if you're still with us. Let me see. All right, so I saw this and I thought this was interesting. So let's scroll up on this one here. All right, on this one, the co-manager of Vanguard's $48 billion income fund, $48 billion income fund has beaten 88% of competitors this year by finding winning dividend stocks using this simple strategy. Do y'all want to know the simple strategy? I can skip this. I can skip this. I can skip this. All right. Do you want to know what the strategy is? I'm sure you do. All right. So Vanguard's Sharon Hill has overseen a fantastic performance for her $48 billion income focus fund. $48 billion income focus fund. She targets stocks with promising dividend growth, valuations, fundamentals, and sentiment. Now, I've been talking about these dividend growth strategy. That's another strategy, right? When we start looking at the aristocrats, and you start looking at your kings, and looking at the fact that they have increasing dividends for the past 25 and 50 years. So some people just go buy dividend stocks, and that's their strategy. They're just investing in dividends. That their strategy may be in aristocrats and kings. They pick something that they like, or they pick an ETF that contains both of those, that king, those set of kings, and those aristocrats, and they just buy those ETFs and they just keep investing in those because they know one thing: everything in there is it has growth dividends over the past 25 and 50 years. So they just invest that way. So you can use that as a safe investment strategy where you're just saying, hey, at the end of this, I'm gonna get my dividends. Right? All right. So let's look at what she has. All right, Sharon Hill isn't your typical fund manager. She co-leads the Vanguard Equity Index Fund (VIPX). VEIPX. Let's look at VEIPX real quick. VEIPX should come right up. All right, 43. All right, so let's look at it over the past year. Of course, we had some down. We're looking at the 5 years. Of course, we know when this was. That's the big dip right there. But we seeing, we got to bounce back, right? We got to bounce back, and let's look at it at a max, right? You want to see that. We know what happened in 2020 here, and we bounce back. So this is the from time of inception to now, right? And this is Vanguard's Equity Income Fund, VEIPX. VEIPX, right? And you can go to Vanguard and check it out. Let's go over here to Yahoo, see what they're saying about it. Um, $43.47 at the end of closing. Let's see, it has $51.66 billion in net assets in it. Inception date is 1988. Let me look and see what else they got here. 5 year max. Yeah, they got the same one. And it's been on a roll this year, actually. It got a little dip here, but it's been on a roll. It's up at 44 at one point. Well, that's last year. That's 2021. We're at 43, so it may close out on a high this year. May close out on a high. All right, so let's go back to this one. All right. She leads the $48 billion in assets, and is in the top 12% of funds this year and the top 15% in the last decade. A performance strong enough to want a 5-star rating from Morningstar. The former equity quantitative research head of Macquarie Group told Insider that a few years ago it took time for it to sink in that she'd be working at one of the world's top asset managers, overseeing a sizable chunk of its $8 trillion in assets. When I came to Vanguard, I stopped and said, how many zeros are in a trillion again? Hill said in a recent interview with Insider, you get used to that in a sense, but it's a huge weight of responsibility. Hill's first year and a half of co-managing the fund has been relatively seamless. Even a global economy appears to be on the brink of recession. While Hill acknowledged that her firm's view is that an economic downturn is likely, she still sees plenty of investing opportunities. How to invest like a $48 billion manager, right? Vanguard's income focused fund has sector agnostic approach and is composed of stocks with a variety of industries that have one thing in common. Hill said they're all more attractive than their peers when it comes to dividend growth, valuation, quality, and sentiment. The first attribute is most important. Hill said companies have to have a history of commitment to sustainability, growing their dividends, and have balance sheets to do so. So to have the balance sheets to do so, tend to be great fits for the fund, right? Dividend growth, like I keep saying that your aristocrats and your kings. If you want to be safe, look at your aristocrats and your kings and be safe. As long as the firm pays a dividend that's competitive versus its peers, Hill said there's no set minimum yield, but added that the stocks in her fund rarely have weak yields. In addition, and you can go look at the stocks in her fund. Maybe I should just do maybe I should do like we should do a deep dive on the VIPX on what's in that in that particular fund and the companies that are in there and look at every last one of their rate of returns. I think we should probably do that on a meetup, not a meetup for women in Linux Wednesday meetups, but just on a on off of YouTube. Just drop one Saturday night and do a deep peel back the onions and the layers. Bring your drinks or something like that and peel back the layers of this particular fund, right? All right, so let's get back into it. Y'all, let me know in the chat if you want to do something like that. D, what are your thoughts on that too? All right. In addition, for companies, for Hill looks for companies that are fair value relative to their short history and to others in the sector and industry. That said, there's not a specific price to earnings or PE ratio that the stocks that makes a stock buy worthy or puts it off limits. Hill also emphasized that she uses a multi-factor model to make or buy sell decisions, meaning that the stock doesn't get purchased slowly because it's cheap compared to the history of the peers. To use a recent example, shares of Meta plummeted on Thursday after the firm's dismal earnings report on the night before, but the PE ratio 9.5x alone doesn't make it a buy. They may end up buying super cheap, but then you might look at it on the basis of saying earnings stability and it's to score very poorly over earning stability, or maybe it's going to have a high short interest that's going to be a negative score. A focus on a focus on quality helps he'll avoid stocks that are cheap for a good reason. Stable profit margins, earnings are a sign of company health, or a sign of a healthy company, and he'll say and is a high return on equity (ROE). Finally, Hill examines whether or not her analysis of the stock fundamentals and valuations are accurate by gauging the market sentiment. But that doesn't just mean seeing if the shares go up and down. We're looking at the market participation sentiment. We're looking at things like short interest changes in short interest. We're looking at analyst price targeted change, and we're looking at what I guess I'll call optimism in the related companies. So if we start seeing momentum, say in a supply chain or in a set of customers of a company, we feel like that too is a positive indicator of market sentiment. Once Hill's fund has 150 to 180 stocks that it typically carries, she said she manages the risk by regularly running an optimization process to ensure that the fund's validity is acceptable and that the holdings continue to meet the criteria that earned them a spot in the first place. As far as cash goes, Hill said the one level of unused capital in her portfolio is close to zero as possible. This market environment may be choppy, but her view is that the investing in the right stocks has proven dividend growth. So here's what my think I would think too is put go follow Sharon Hill online, find her on Twitter, find her on LinkedIn, see what kind of information she's giving out, right? I'm not saying you're gonna take what she's saying and go invest in it, but clearly she has done her research and she's also running the fund. So it's someone, I don't want to say you're gonna trust her with your life, your income, but I'm saying it's someone you can look at as far as trusting and seeing how they're moving. Look at what that fund is investing in, because again, those funds, once you start making an investment in that fund, you get those reports. You can go on Vanguard and look them up. You can go do the research, the research that they did. You could get access in terms of like why they chose it, reports and so forth. So that's what I'm saying when I say research. You heard about this person, you go look them up. You go look at that fund that they're investing in. Go look at the companies that they're investing in, and then let's peel back the layers. Natasha, you say, how can we help you, Tam, put that Saturday event together? Um, time, time. I don't know. I don't know. Do we want to do? We could. I mean, we could do this virtually. We could do this before the end of the year. Actually, where we just do something on a Saturday. Let's spend 2 hours on it. Um, let's peel back the layers of it, and it's no secret, right? You all can do your research on it too. Like we can probably set up. Let's find out first what's in the fund, what companies are in there, and then maybe we have a group of people that take maybe three or four of the companies and they go look at the companies, what they find interesting about them, and put together like I don't want to say a presentation, but yeah, it was really what it is. Like what companies are there, put it together, and now we have, you have the companies, you have an interest in those companies, and then you have it, and then you know what fund is actually encompassing all those companies. And not only that, you may just want to invest in the company, those individual companies, and not in the actual fund itself. But I'm just giving you we can have the ability where we can have, you know, and we probably can do something like that on a monthly call situation. D put this on the back in for 2023, where we have monthly investing calls. Um, we can set it up on a membership basis. Talking out loud here. Where we charge $5 a month, and we go and break down funds, and yeah, we can have like an investing fund group. We can probably start bringing in some people and something like that. Just something, just in general. Now, I'm not talking about startups. I'm talking about this fund, VEIPX, and the person who's heading that fund is Sharon Hill, where we can have, where we do a breakdown of those companies, what we liked about them. We follow, put them on a watch list, follow them for a week, come back, talk about the different funds, what we like, who manages the fund, right? We often hear about these funds, but you don't know who managing them. You don't know the history behind the person, right? Just putting something right there. Put a warning in order not to get sued. Yeah. Well, actually, here's the other thing too, Evelyn. Uh, So my Series 65 class is next week, and I have my exam coming up as well too. And so studying and getting my Series 65, like, and we also have some other people in the group that have their Series 65 that will be there as well too. So being sued, yeah, we're gonna remedy that part right there. Um so we can continue. I got some people in mind. I got some people in mind. Um I got some people in mind that we can bring in. But those are my thoughts. It's something I wanted to do a year ago. But yeah, yeah, like a monthly call. Yeah, 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 like a monthly call. Like, hey, we looked at this fund, and here's the other thing too. Like I've been wanting to do is like look at these different hedge funds and what they've been doing and so forth, right? We all saw FTX. There's no secret about that. There's nothing about that. There's a secret. We saw, excuse me, what happened with that, right? But I'm gonna bring in there's a little light to some things behind that today that I actually looked up, because I was just curious. I haven't done a deep dive all off into this, but I've been loosely following it. I have tons of articles on it, but it's quite interesting on it. But let's finish this off, and then we'll roll into that conversation of FTX there. All right, so dividend growth is one of the few things that has kept the inflation as you go back and look at over the decades, he'll say. So when you go back and you look at the 70s, 80s, which is the last time you can actually find any notable inflation, what you see is dividend growth pretty much kept pace with it. So again, dividend growth, those aristocrats, those kings. He'll add it, an inflationary environment, dividends paying stocks are a good place to be. All right. So I keep saying aristocrats and kings. So aristocrats. Right. So let's go and look and see who's on the list. And this as of November the 1st here. Let me scroll down. Let me see if they're gonna give the list so we can just roll off the names because I rather just roll off the names. I can go to another site, but let me go. I probably have to go to Investopedia. Hold on, let me see if they got them on here. It looks like they got them intermingled in here. So yeah, here we go. Right here. That's where it starts right there. It was number 5. All right, so let's go back up to here. All right, the top 7 dividend aristocrats now. Aristocrats. Analysis of our top 7 dividend aristocrats. These rankings are based on the 5-year forward expected total return estimates and share analysis. So hold on, let me blow that up because I know it looks a little small on your screen. Okay, I guess you want to say Leggett and Platt, or is it legit in Platt? I call it Leggett. I don't know. That's what I'm going with in Platt. A 5-year annual return of 13%. Um, LEG is theirs. They are a diversified manufacturing company. It was founded in 1883 when an inventor named I guess Leggett, um, created a bed spring that was superior to existing products at the time. It composed of 3 majors. They're I guess you could say this aristocrat composed of 3 segments with a varied product mix and geographic split. The bedding product segment designs and manufactures bedding components such as bedding industry machinery, steel wire, and adjustable beds and mattress springs. Right. I'm gonna skip over what they got for them. We just gonna get to the names. Right. The next one was Franklin Resources, with their ticker being BEN, Franklin Resources. Let's keep going. Uh, Pentar, PNR. Let's keep going. Lowe's. Everybody has heard of Lowe's. LOW for Lowe's. Albemarle. I said Albemarle Company, ALB. Let's keep going. 3M has been up there forever. 3M. Keep going. VF Corporation, VFC. And they got expected returns of 25%, right? For the last 5 years. And it says the Dividend Aristocrats is a focus analysis series. You can see analysis of every single dividend aristocrat below. Each is sorted by GICS sectors and is listed in alphabetical order. The Sure Analysis database research database report for each security is included as well. And this site is Sure Dividend, right? The Dividend Aristocrat focus again. We're talking about what companies can you be in terms of aristocrats that have been performing, that have been giving increasing dividends over the past 25. I think it's 25 for aristocrats and kings is 50. Was it 50 for kings and 25 for aristocrats? I forget. I forget. Mm-mm-mm. Let's go find out. Let's go Investopedia. Go. A dividend aristocrat is a company that only pays a dividend consistently, but continuously increases the size of their payouts to their shareholders. Let's look at this right here. Do do do. Come on, get off of that. I couldn't remember. Couldn't remember. 25. Aristocrats is 25. Kings is 50. Right? Aristocrats is 25 and Kings is 50. So they actually this is as of November the 1st, and I'll give this to D in the back, and she can post that to y'all so y'all can have that link. But again, they do an analysis breakdown, but you don't have to trust them. You can go to your Fidelity, Vanguard, look up these companies yourself. You can go to Seeking Alpha as well too. A lot of people have their own analysis on these as well too. But look at what the companies that are on here: Colgate, Palmolive, Clorox, Coca-Cola, Hormel, Kimberly Clark, McCormick and Company, Pepsi, PepsiCo, Procter and Gamble, Cisco, Walmart, Walgreens, A.O. Smith, Centos, Dover, Emerson Electric, 3M, Pentar, Stanley Black and Decker, GD, Caterpillar, Abbott Laboratories, Johnson and Johnson, um, Lowe's, McDonald's, Target, Aflac, Brown and Brown, S&P Global, T. Rowe Price Group, Ecolab, PPG, Sherwin Williams, Chevron, Exxon, Essex Property Trust, Fidelity Realty Investment Trust, Realty Income, Atmos, and the list goes on. And it, again, right here looking for, and this is what we call, it's called DRIP, right? Dividend investment. Click here to read an article on examining DRIP dividend aristocrats, right? So you can stay with the aristocrats and you can stay with the kings to do your drip investment, right? So you may do drip investment with just aristocrats. You may do drip investments with just kings as well too, right? So those are your options. You can look into more into that as well too if you want to get into that. But I think these will be great for monthly calls. Being able to I think one of the biggest things is being able to look at a report and understand what it means. I don't think we do enough of looking at a report and a prospectus and then understanding what it means. Right? What does it actually, when you read this prospectus, what does it actually mean? What is your takeaway on that? Being able to have that conversation as well too, right? About how to break down a prospectus. Let me see. Break down a prospectus. Yeah, we go right here. Is what is a prospectus? A legal disclosure document containing information about an investment offering to the public. You'll find this on Charles Schwab and so forth, right? A prospectus is a legal disclosure document. Let me blow that up, that provides information about the investment offering to the public and that is required to be filed by with the SEC and the Exchange Commission, or local regulator. The prospectus contains information about the company, its management team, and financial performance. That's why I say go follow Sharon Hill and VIPX and put it on your watch list and then peel back the layer. And what companies are they investing in? How often do they rotate those companies out as well too, right? So that it changes, so you know where it's going and what it looks like and so forth, and why are they choosing it. Attending the monthly, and not the monthly, but the investor calls to see what they're talking about, right? And all of this sound like a full-time job. I get it. I totally understand. But what I'm saying to you is, if you're gonna work for your money and you're gonna take it and give it to somebody else to invest it, and you haven't done the research on that particular one, you're doing yourself a disservice because you already worked for the money, and now you're just gonna give it to somebody. You say, well, here you go, right? All right, so I just want you to keep that in mind. And so in this, let me get rid of this here. It says, let me go back down a little bit. Right. It says, and other related information. So in the prospectus, you'll find the company overview, the management teams, the securities offers, use of the proceeds, other decision making information. Right. And they go on to talk about the prospectus or a bond issue, and they break all that down. But I just, and then they give an example of one. Right. So I'll give you this one so you all can have this as well too. A breakdown of a prospectus. I think we should probably do that on a call so we can so you all can ask questions. This right here, YouTube is not intimate to me unless we drop the link and everybody's out here like, oh, I'm exposing my thoughts and so forth and so on, right? So I don't want to do it that way. I want you to be able to be comfortable to ask your questions and so forth. All right. So we talked about that, right? But I wanted to let me look for it here in my notes. See, I have one that I wanted to bring up. I have a couple of them I want to bring up. Is this it? I don't think it is. No, that's not it. Hold on. Oh, here's another one. But it's not the one I'm looking for right now, but I'll go back and look for it in a minute. All right, this one right here was 10 best dividend aristocrats of 2022. Let me scroll down here. Again, everybody got their own, right? New Corp, 49 years of annual increases. Um, West Pharmaceutical Services, Centos, Sherwin Williams, Brown and Brown, Granger, ADP, Air Products and Chemicals, Target, Cisco, and so forth. All right, so here's another thing, and I talked about this before. You also can do your investing with your HSA as well too, right? So maybe you don't want to buy a CD, maybe you don't want to be in a money market account, maybe you don't want to buy I bond, maybe you don't want to go and invest and do dividend or drip investing. Maybe you don't want to do bond laddering. You can invest with your HSA. You can throw money into your HSA and invest with your HSA. Um, you can do if you got a Roth 401k and they got a backdoor set up, maybe you just throw money into your backdoor IRA, right? Maybe you maxed out your Roth investing on your 401k, you do a backdoor, right? I'm I'm strictly reserving this for very conservative long-term investing. I'm not going to talk about investing into a house. I'm not going to talk about going buying investing into a rental community. I'm not going to talk about that today. I'm strictly keeping it something that you can go click on and do this investment yourself and have a strategy for yourself. Sit down and come up with a plan. Do you want to do bond investing? Do you want to invest in a high, or do you want to get a high yield savings account? Do you want to do a money market account? Do you want to do drip? Do you want to do bond laddering? I'm keeping it very simple, something that you could do with you and your mom or your dad, or you could do this with your child or your children or your cousins. Maybe you all have a group of cousins or y'all that get together, or a group of friends of y'all that get together, and you sit down and maybe you do a presentation, right? Maybe you yourself do your own research and put a presentation together and say, hey, I have these friends and I want to present this to you, right? And maybe y'all sit down on a Zoom call or and say, hey, look, I'm not a financial advisor. Not saying that. But I'm saying here are some things that you can easily do for yourself for your money, especially, and this is something I actually brought up yesterday, which was um, I'll go into it backwards. I'm going about this in a backwards way. I said to D yesterday, and another friend of mine, um, what we see all these Sally's closing down, right? Or they're losing their locations, right? They're closing locations. And I said, how much would it take for us to get together and go buy Sally's, right? Because Sally's is across the United States. I'm not sure if they're international or not, but I know for sure they're across the United States. And what if we went and bought us? What if we went in and bought Sally's, um, and bought them out and held and make sure that in that contract you held their inventory and their people that they've been communicating with, right? Their vendors. They got to stay within this buyout for the next 5 years, right? Maybe three and a half. And we take the Sally's and maybe rebrand it and put in a school and a salon. Because what I've never seen is a nationally owned black salon. Like we have individual salons, right? We have somebody that went to school, they got their license, and they started their salon, and they may train somebody else, right? But we never seen that nationally, right? Never seen anything nationally. Now, I say all that to say, going in this backwards is coming into this. What should take place is a presentation on putting that together on what that could look like, right? And I implore you all to take your ideas and put them on paper, and present your ideas, your thoughts and stuff to people, um, that understand. I ain't saying everybody's gonna understand this. I'm not saying that. But present your thoughts and ideas to people, and maybe some people that don't understand. Maybe they ask questions that you didn't even think about, right? Maybe they ask questions that you didn't think about. But I'm simply saying is being able to put your ideas down on what your investment strategy is for yourself and how it has worked and what has not worked, and putting that together so you can see it for yourself and then sharing that with others, right? But I put that out there because I was just when I was talking about Sally's, I was like, okay, well, what does that look like if if we had a national salon where you can go and bring in different content creators and all of that, and when you move to a new city, because this happens all the time. You move to a new city and the person who's been doing your hair or whatnot, you like, oh Lord, I'm going into a new city. That I'm gonna be honest, that's probably one of the biggest factors for women, especially women of color, all right, going to a new city and trying to find somebody. Thank God for Instagram, because before it was just like you get to the city and you see a woman out and you like, I like her hair, and you like, who do your hair? And if she nice enough, she'll be like, oh, such and such do my hair. And we got some surefire haters out there that'll be like, oh girl, the girl, and this happened to me in DC. I asked the chick, I said, hey, who did your hair? She's like, oh girl, I go to New York to do it. I said, great. Well, who did your hair? She was like, oh, it's just, they up in New York and they busy. And I'm like, and I don't know why we such haters. I don't know why women are such haters when it comes to doing hair. Like, you don't want somebody else to know where you go get your hair done. So that means the person that's doing your hair can't get no more clients, so they can't grow. Right? I don't know why women do that. I have no idea why women do that. Such a hater move. But again, I'm saying all that to say, being able to sit down and put your ideas together with people on about your investing strategy that are close to you, so y'all invest together, is really what I would like to see. Is like, hey, you got one or two people, you got three or four people that rock with you, and y'all investing together, right? And y'all like, oh, did you see such and such is coming out with X, Y, and Z? We should go. Maybe we should look at that. Okay, well, let's do some research on that. Those kind of conversations that I like having. I do like having all the other messy conversations. That's messy tea, but I prefer the investing conversations a little more, right? But those are my thoughts. Let me find this one because I really want. This is a messy one. I might have it up here on there messy. Yes, I do. This is all right now. This is this is messy tea time. Oh yeah, we finna get messy. Oh yeah. Oh yeah. You're welcome, Natasha, on the links. All right, let's scroll up here. Let's have a FTX talk. All right. Thanks, Sir Hill. Thank you so much. Thank you for dropping by. We appreciate the super chat. How are you? And how is the missus? All right, so this messy tea time. Now I don't know if they're gonna the powers that be is gonna shut this stream down once I start talking about this. Shouldn't this came up in the article? You see, it's posted 7 hours ago, but I found the background of this to be very interesting as well. All right, Caroline Ellison is a math whiz, trader, and the shadow figure behind FTX's collapse. Here's how a devout Harry Potter fan came to take part of in crypto's biggest implosion. We've already seen Steph Curry, um, what's his name? He just escaped me just that quick. Tom Brady. We see the Winklevosses as well too. We see that um, Tom Brady's wife, ex-wife, and a slew of other Mr. O'Leary, the money man himself, saying you can't fool me, you can't get over on me ever, and yet here we are, right? Um, even I was even looking at the gumball rally over in Dubai. It was in Dubai this year. Gumball uh, rally Dubai 2022 uh, in the Middle East. Here it is right here, the Gumball Middle East rally from November the 12th through the 20th. And as everybody come out and they're riding through this route right here for the Gumball rally. Right, this is their route, starting in Abu Dhabi, going through Dubai, going all around. They got their stops and stuff like that, and come back up. Right, well, they driving all the fancy cars. I don't know if you've seen. I don't know if you've seen them. Let's see. Let's go here. But some of these cars got FTX on it. Right. So here we go. Right. Right. This DDE on there. And they got all the cars. Everybody's out and about. FTX, you see it all over. FTX all over the cars, right? So those, some of those folks invested. They go Eve. There go Eve, right? It's a big rally, right? And I've been watching it for a couple of years, and I'm like, man, I'm not sure what you have to do to get invited to this gumball rally or whatnot. I'm not sure if it's all influencers or whatnot. But I say that to say, back to this article and FTX and what that looks like. She is the or was the CEO of Alameda Research, and a trading firm launched by Sam Bankman Freeman, or SBF as they like to call him. And it is reported in this article this was his girlfriend. I told you this is messy, so we about to get into it, right? They got a little background on her. Ever since everything has broken free over they were saying over the past month or so, she has slowly wiped herself from the internet. Slowly wiped herself from the internet. But let's talk about who she is. Over the past few weeks, a mushroom of secrets about the inner workings of SBF crypto exchange fund FTX has come to light. From that, once the shadowy figure of Caroline Ellison has emerged as an important character behind FTS seeming success and surprising downfall. Ellison was the head at Alameda Research, the trading firm which SBF moved crypto tokens in tandem with running FTX. Amidst the revelation that FTX borrowed money from the customer accounts to fund bets via Alameda, Ellison has become a subject of online speculation. Ellison's virtual presence has, however, is dwindling in the day. Her LinkedIn, online photos, and the contact information have largely disappeared over the past couple of weeks. That has left journalists, investors, and voyeurs of all types scrambling to find information about her. The curiosity has also heightened since Coindesk reported via anonymous sources that she was in on the on and off relationship. She was in an on and off relationship with SBF. All right. Now I want y'all to hold that thought right there while we go over here to my notes and find this article here. See, oh, it's not on here. Hold on. It was an article that I had about Binance. Hold that thought right there. We're gonna come back to that. Since we talking crypto, I wanted to pull this up because I know some of you are in these different exchanges and so forth, right? So Binance came out and said, "Hey, Binance holds $74.7 billion worth of crypto in its reserves, and roughly 40% are owned in the firm's token," report says. And so now they're working. Of course, this is going to start that regulation role to come out, right? Binance says nearly half of its Binance reserves are in the firm's own stablecoin and native coin, according to Bloomberg. The co-founder Shangping Zhao said earlier this week Binance will be more transparent and provide proof of the reserves. The exchange's total holdings amount to 75 billion. Okay, so here's where I'm going with this. Why I brought this up. Now, we just talked about CDs and high yield savings account, and then we talked about the FDIC. And we said, hey, they can actually, they're actually backed by some insurance, some type of insurance in case the bank goes bankrupt. The FDIC can kick in. Now, who is who is backing FTX and Binance if they go bankrupt, or if they file for bankruptcy, or if they just disappear off the map? How do you all get your money back? What's the insurance on that, right? And two, why are you not using cold storage to keep your stuff, right? I was reading the article this morning and was saying 40% of the people was able. Well, some people were able to get 40% of their money back. Here, get it right here. No, that's not it. Let me go back to the article. Is it on here? I don't think so. I'll pull it up. But it was saying some people will probably getting their money. Some people was able to get some of their money back. But again, this is why I'm being showing you the conservative side or investing, right? The conservative side, right? Where you're saying, hey, I got $20,000 that I'm gonna go put over here in this money market account. I got $20,000 I'm gonna go put into a CD. It's backed by X, Y, and Z. Something happens, boom, I can get my money back, right? Um, so my thing is, whenever you're picking whatever you decide, what kind of investment you decide to pick, what type of insurance is on that investment. Even if you're investing in a house or what have you, or in an investment group or what have you, what's backing that? What does the paperwork look like? Where you can say, hey, boom, well, you can get your money back, right? So I just want to throw that out there. It says right now, um, reliable information about Ellison has been sourced from her Tumblr account and a handful of media interviews she's given over the years. The bones of her virtual self suggest that Ellison is extraordinarily bright and highly educated, as well as a math whiz and a big reader. She speculates often about gender roles and shifts in culture and society on Tumblr. Here's what we know about her. Ellison grew up in the suburbs of Boston. Her father, Glenn Ellison, department of is the department head of economics at MIT. He once reported directly to Gary Gensler, the current chair of the Security Exchange Commission. Ellison's mother, Sarah Ellison, is the senior lecturer in economics at MIT. We definitely got exposed to a lot of economics. Ellison once told Forbes in an interview, right? When she was 8 years old, Ellison reportedly wrote her father an economics paper analyzing stuffed animal prices at Toys R Us. Ellison, who attended Newton North High School, had a special aptitude for mathematics. She would flex her skills in competitions like Math Prize for Girls, which bills itself as the largest math prize for girls in the world. In 2012, she enrolled in Stanford, where she studied mathematics. Ruth Ackerman, a math professor who taught Ellison, described Ellison to Forbes as bright, focused, on very mathy. And we're really literally talking about people like when we're talking about this because they were saying that SBF was in Bahamas and was ready to they're trying to prevent him from going to Dubai. Well, we're literally talking about people that can set up and send encrypted messages on an encrypted network, right? Let's not forget who we're dealing with, right? You're dealing with nerds and geeks that understand the flow, how to encrypt. They understand how networking works. They understand how to send messages. We're not dealing with someone that don't know anything. So, uh, being able to erase yourself off the internet is easy. Um, Sending encrypted messages over an encrypted network. When you had that kind of money, you may have your own little data center in some name that don't nobody know about that's sitting off somewhere else, right? Like little things like that, right? So let's keep going. It's a philosophical movement that uses calculations to understand how people can use their time, money, and resources to best help others. She eventually joined Stanford's Effective Altruism Club. After college, Ellison went to work for a trading firm like Jane Street. There, she met SBF, and the two supposedly bonded over their interest in effective altruism. Right? VPNs and dirty VMs, correct? Dude got some server in India. Yeah, like like to be stealth. Encrypted. Now we got encrypted CPUs, encrypted over a network. Yeah, easily. In By 2018, SBF, also known as SBF, launched a crypto trading firm called Alameda Research and persuaded Ellison to join him. This was very much like, oh, yeah, we don't really know what we're doing, Ellison told Forbes of her initial impression of Alameda. And Sam, Sam been chopping it up and eating good. Aside from Ellison, the Alameda research crew included SBF close friends Nasheed Singh, Gary Wang, and Sam Trabuco. They moved from Berkeley to Hong Kong in 2018, where they lived like college students and fiercely traded crypto. Ellison was the only female on the team. While the others played video games, she would be watching the royal wedding of Meghan Markle and Prince Harry, or Prince Harry and Meghan Markle. After SBF established FTX in 2019, here we are in 2022, and we're already talking about everybody's like, my money is gone. Ellison began taking more responsibility of Alameda research. She and her colleague Sam Trabuco were featured in Forbes 30 Under 30, right? That's their profile there. Ellison maintained an active online persona. She tweeted under the handle of Caroline Capital. She supposedly had two Tumblr accounts, World Optimization and World Optimization Life Advice, according to Gawker. Still, Ellison largely remained out of the limelight as FTX rose to fame. FTX employees told Forbes that Ellison was content on staying behind the scenes. In April, Trabuco stepped down as CEO. Since then, Ellison has been solely running Alameda. Now, amid the fallout of FTX, online investigators ranging from Twitter account Autism Capital to media outlets like Gawker have rushed to unearth information on Ellison. CoinDesk, the crypto publication, reported that through anonymous sourcing, that Ellison was among the 10-person crew on FTX and Alameda's employees who lived together in the Bahamas. CoinDesk noted that all 10 members were paired off in relationships with one another at some point. Ellison reportedly had an on and off relationship with SBF. I guess this is the compound here. Leave K in the Bahamas, right? On what is assumed to be her Tumblr account, Ellison likening the polyamory in the Bahamas house to be imperial Chinese harem. She supposedly noted that there was an established hierarchy and everyone knew where they fell within it. I told you I was going to be messy tea today. I told you I was going to be messy tea today. What they said is, if we're going to make this money, we might as well all make it together. Woo! I'll just say it. That is, you know where you fall at in line. Freakiness and crypto. That's right. Ellison, along with the other housemate, reportedly shared a therapist named George Leonard. Ellison is a reader and often posted book reviews on her Tumblr. The most recent titles she reviewed include The Golden Enclaves by Naomi Novik and Venomous Lumpsucker by Ned Bowman. But her literary tastes range far and wide, from Harry Potter series to Substack of Matthew Iglesias, a blogger who writes about economics and politics. As of 2021, her favorite color is gray. She often talks about her relationship as being a trade, which can be understood as one who adheres to conventional gender roles and traditions. Ellison contended on her Tumblr that over time she's moved away from being a trade to becoming a bit more agnostic on culture and society. The late Supreme Court Justice Antonian Cilicia reported it lived in her former home. It is unclear what will happen to Ellison moving forward. Her online presence, including her LinkedIn, is dwindling by the day, and her physical whereabouts is unclear. She last posted online November the 6th, tweeting that in defense of Alamina's balance sheet. A few notes on the balance sheet info that has been circulated recently. The specific balance sheet is for a subset of our corporate entities. We have $10 billion in assets that are not reflected there. So I just want to give y'all that little bit of insight. That's why I say go look up Sharon Hill, what she do, managing, do the background, do your research on these hedge funds, investment funds, Vanguard, BlackRock, what they're investing in, how did they get their investment started? They're go to finance, I guess it's FINRA's. Is what it is, not FINRA. I think it's FINRA's. Let me double verify this on YouTube, and it's FINARUS. I think it's how you spell it. Yeah. I've been watching him on this one right here. Stephen Cohen, that's one. But if you go, it's Fin. It's okay. It's Finna IUS. Here you go. And you look at the latest videos here, the one about Goldman Sachs and how they rule the world. Alan Greenspan and so forth. But getting into the minds of these people and what they do, how they invest, how did they become to be these investors, between him and Lex and a few other ones, you will find out a lot of information of who did what, when, where, and how did they come to be. Where and you were like, oh, okay. Right here, Fidelity, the $8 trillion private company, right? $8 trillion private company. So those are the little things that I did. These are not all the things I wanted to share with you today. I got so much more. Well, I know we got to start our next show at 2:30. So I know I got to end this show right here. But I just wanted you all to have that little bit of information in terms of being conservative in investing, right? And what that looks like, what it could look like. Again, I'm just really talking. I don't want to say basics, but I'm just saying being conservative on your investing as you do that, as you do it. Oh, D said the next show is at 3. Okay, so I got 15 minutes. Um, but I just want you to understand, you don't all have to go out there and buy, all this other stuff. D said, no, you don't. You don't have to go out there and buy all this other stuff, right? You can literally do conservative investing and go from there. So, again, your 401ks, your TSP plans, your Roth 401ks, your IRAs, your backdoor IRAs, your bond laddering, mutual funds. I didn't cover mutual funds today. I'll do that next week. But your mutual funds, your um aristocrats and your kings, and doing drip investing, doing research and understanding how to read the prospectus, knowing what the companies are invested in those ETFs, and in those in the ETFs, and even within the companies in those ETFs, the funds as well too. um who is heading those particular investments, and going from there. um be able to talk about a prospectus with your friends, right? There's nothing wrong with that. Some people don't invest because they just don't know what to do, so they do the basics, and the basics is, I get paid, I go take my money, I go put it in a savings account. It only gives me 0.01%, for the year. It doesn't grow a lot. An emergency comes up, I go to the bank, I grab that money out. It hadn't earned anything, so I got to work again to go put that money back, the money that I took out back into there, versus the money is sitting there, it's making money, it's earned some interest. So that interest that it earned, I could take the interest out and maybe a little bit more. But when I go back, it's still earning interest, and I'm replenishing what I put back. Having that ability, and to with your friends to understand that, especially, and the reason why I bought up the hair salon is because that's again, people who make that that fast money with cash apps and hair salons and people paying you cash or whatnot. Don't pay me on cash app. Give me cash. Give me my money in cash. All right, and I'll go take my money and go do something with. When you having that money like that and you know that you can make that money or whatnot, you tend to spend it, right? You're not investing it. So I just want you to learn small things, right? And then help your friends out with small things of investing, being conservative. Like, hey, you got it in the high yield savings account. Yeah, okay, cool. You bought you a CD, right? You got an I bond, right? You just gonna keep buying into that, right? Oh, okay, cool. You know they at this rate, right? You should do this. You want to sit down one weekend and we set that up, right? Let's get you going on that, right? Just take your strategies, that you have done and proven to do, and then continue to do those things. Natasha Tamady, thank you for sharing the links to YouTube. I will look into sharing his portfolio. I'm highly interested in dividend investing long term. Yep, drip, right? Yep. You said you want to be able to buy your own private jet. Like, oh, okay. So let's talk about that real quick. I actually got a link for you today. I had looked into this just for you. It's actually for me, but just for you. I was gonna go. I wasn't gonna bring it up, but you brought it up. So now I gotta talk about it. See how that work? All right, so look. Should you buy a plane, an airplane for training and time building? Right. So I had looked into buying a plane. I had looked into buying a plane. Literally, I had this up. It's on my it was on my list to talk about. On my list to talk about buying your own plane. The reason why I had thought about buying my own plane, and then a couple of friends of mine, we were sitting around talking about this. Like, well, one of my friends just bought a boat, and I was like, I need to get me a boat. I've been wanting to get a boat since 2013, and I didn't, and I did, and I had it ready. All I had to do was sign the paperwork, and I didn't. But now my friend was like, "Well, I got a boat. He's getting ready to upgrade his boat, so I may buy his boat. I got to see." But then I thought I had been talking about buying a plane, and we had been talking about buying this plane forever. So I want to do some research on about buying planes. What's that look like? And again, like I said before, I know a couple of people that build them, and they already got their pilot's license. I know at least 10 people that got their pilot's license. Three used to work with me. Three work with me now. At Yeah, three work with me now, and three I just random conversations I know that they have. Yeah. All right. And some of them are women. So I'm more interested in an aggressive investment, but I also want to weigh some of my portfolio with long term moves. Yeah, I'm with you on that. Yeah, we're not talking about you said buying. Yeah, I said buying a plane. Yep, I did. I said buying a plane. So look, let's get into this real quick. I got to speed through it real quick. Um Said recently I've read several threads on Reddit's R flying forum regarding the feasibility of purchasing the aircraft for training and time building. Now, you got to put in some work for get your pilot's license. Like I say, excuse me, you can go to Gleam um right here, and I'm not promoting them. I'm just saying this is one place I went to. But you can go on here and you can find stuff for aviation and pilots. Like if you want to get your pilot's license, if you want to do aviation training and stuff, and a ton of people have them, right? They're these little smaller airports and so forth. You can become a part of the pilot group, and you can also do this with boating as well too. Become a part of the pilot groups, and then being that you're a part of the pilot groups lessens your financial burden on getting your hours in to fly your plane and to learn. You start off with a written test first. Once you get taking care of that written test, then you got to start putting in your hours and getting your flying hours in and so forth, right? So they have all this here: pilot training, flight instructors, drones, and so forth. If you come over here to pilot training right here, you want a sport, private pilot, instrument pilot, and actually, ironically, I actually went on a date with a pilot, and so I had a pilot conversation with him, and we were talking about it, and he was saying he was a private pilot for 8 years, and he was saying that from being a private pilot, and flying back and forth, he got into the conversation. I was like, "Well, which one do you like better?" He's like, "I." He said he definitely likes flying private better, but he's like, he also likes the certainty that comes with being a pilot. He's over at Delta now. So yeah, so again, I'm just throwing it out there. Other things, yeah, little small regional airports, right? So again, let's get back to the article, and then we're gonna wrap it up real quick. I got 9 minutes to wrap this up. All right, cool. All right, so it says, it's an interesting and somewhat complex question that deserves a closer look. I was not an aircraft owner until I had more than 10,000 hours, but I know a number of professional pilots who purchased and flew aircraft for training and or time building. I think the ownership can make sense in certain some circumstances, but definitely not all. And the choice requires a sober consideration of your needs, wants, and resources. The conversation about aircraft ownership usually centers on cost versus renting, which Uber has jets. You can, if you all don't want to do this, you can go Uber jets. You guys can fly on Uber jets right here. If you don't want to do that, right, you can fly on Uber jets. Those that are some things that are Reno JQX JSQ is J Jet Suites. Hold on, I think it may be Jet Suites. Hold on, I talked about this a while ago. Jet Suites X, something like that. JSX right here. Um, so basically, you pull up to the airport right here. Hassle free. You pull up to their airport 20 minutes before your flight. You check in 2 bags. You walk onto the tarmac onto a private jet, and you fly off. Right. I talked about this a few months ago. They're regional, they don't cover here, but they do cover Miami, Orlando, Destin, Houston, Dallas, Austin, um, Lajitas, Taos, Vegas. Of course, they're out of Vegas there, and Denver, Boulder, and Gunnison. These are just local. If you're in these areas or whatnot, or hey, you feeling fancy and free, and you want to fly from Denver to LA or whatnot, right? So come up here, book your round trip. Let's go. Oh, why it's not popping up for me? Oh, it's not popping up. I might have pop up blocker on, but I don't think so. I don't see that. I'm not. Oh, I'm not even getting. I wasn't even getting that. But anyway, here's the video. Right. So JSX again, private. So why I mention all of that? All right. Because sometimes you may want to buy your plane and you want to rent it out. You can rent your plane out. And some people do rent their planes out. There are apps that you can go be a part of. Um, that you go be a part of, and you can rent somebody's plane just like you can rent somebody's boat. Just like you can rent somebody's driveway, you can rent somebody's pool, you can rent somebody's house for a party. You have all these different options. You don't necessarily have to go buy it. But let's talk about it real quick. Um, the conversation about home ownership usually costs around da 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 da. The thing is, rental and overall training costs can vary widely. There's not a lot. There's not always a strict correlation between and aircraft of cost and aircraft or training quality. Part of the equation must be the cost and quality of the rental and training in your area, and whether you are geographically limited or you can or can search further apart. Three flavors. Ownership costs some Ownership costs come in three flavors: upfront, fixed, which is your monthly, and then variable, which is per flight. I don't consider the purchase price to be a cost because used aircraft prices are quite stable and historically tend to appreciate at roughly the rate of inflation. You should get that money back. Upfront costs include the expense of finding and inspecting the aircraft, as well as the price of registering in your state. Right? Sales and or use tax 0% to 10% of purchase price. You won't get this money back. Fixed monthly costs include the price of financing the aircraft, insurance, hangar tie down, planned annual maintenance. Variable hourly costs are usually fuel, oil, and unplanned maintenance and overhaul fund. He said you need to make some assumptions about your uses. Let's say that you plan to fly the aircraft 500 hours total over the course of 18 months of ownership. You have found a promising IFR equipped Cessna 172 for sale for $75,000. Hired an AP to do a pre-buy inspection for $1,000, and live in Florida where the sales tax is 6%. Your upfront sunk cost is 5,500 or $11 per expected flight hour. You have good credit and got a loan for 80% of the purchase of that 5% interest, which works at about 250 a month. You found an insurance policy covering training at 2,000 a year or $167 a month for your local airport as a T hanger for $300 a month, and you're budgeting $1,000 for your annual inspection. Your fixed cost is $800, or $29 per flight. Lastly, your fuel or 8 gallons per hour at $7.50, another hour for oil, and $30 per hour for maintenance and overhaul fund yields to be a variable cost of about $91 an hour. All told, you're locking in $131 an hour for your very own Cessna. Not bad, right? You certainly won't find a rental that cheap these days. And this is what a lot of people have said to me that own planes. They say you do better just buying your plane and just flying regionally, right, for where you want to go. And if you want to go overseas, like, and when I say regionally, like flying from here to Tampa, from Tampa, from here to Orlando, from here to Miami, or from here to Alabama, or just keeping it in the southeast, right? A few things will become apparent to doing during this exercise. First, you need to have 20,000 laying around because the bank is not going to finance 100% of that. Your 500 hours of flight time over 18 months will cost you about $65,000, and none of that can be financed. You still need to pay an instructor, and though you can do your private certificate instrument rating and time building in your own 172, you still need to rent a complex or a TAA plane for your commercial and a twin for your multi rating. It's still going to be considerably cheaper than going to a Part 141 rating factory. But keep in mind the Part 141 training can use can usually be 100% financed and often at lower interest rates. The second factor is ownership. And they're saying that get kicked out of the cheap hangar and you end up looking at 1,000 a month. The third glaring fact is that more hours you fly on the glaring fact is that more hours you fly your plane, the cheaper it gets, and vice versa. In the above scenario, if you were only gonna plan to keep the plane for 12 months at 250 hours, your hourly cost goes up to 150 hours, which isn't a lot less than the rental itself. And he goes a lot more into it. But I just wanted to bring that up because I know that we have been talking about planes and what is it like to buy a plane. But I just want to give you that perspective from this guy thing. But you can go here to Flying Magazine as well too, and check out the latest and what's going on with private planes, airports, and so forth and so on. Right. So just wanted you to have that little tidbit of insight. I had to stop at 2:30 on the dot. I got through it all, but again, when we're talking about buying a plane, I'll talk about this on the more aggressive side. Maybe next week. I'll do moderate and aggressive investing next week. This week I want to be conservative. I wanted to say, hey, look, you're at the $500,000 range of investing. You want to do something here, go put it into a CD. You're not really sure about stocks yet. You're not there yet. Go hear some little simple things that you can do. And then we'll talk about maybe investing in stocks next week and being more aggressive there and different platforms that you can use to invest in. And then we'll run over and then be real aggressive, or we'll start talking about your investing into land and doing land development and so forth and so on, and investing in hedge funds and whatever the case may be. All right. I see y'all on the next show in the next 30 minutes. Don't forget to hit the like and subscribe. Shout out to Tim. Thank you for entering the chat. We're gonna talk about investing into yourself on this next one, and it's gonna be real good because I got some surprises D don't even know about. All right, y'all. Y'all be safe, and I'll see you in 30 minutes.